Martin from Secrets, the channel for learning about trading and investing. Welcome to quick market analysis that we do daily from technical charts, and we'll try to understand the markets better and plan for a better trade for the upcoming. So we have the bulls that charged today. All right, it was a big, nearly 1% more on the Nifty. Bank index also moved up, but not as much. Let's see. So this is the wrap up. We'll just go to the charts. It's easier and faster. So this is the Nifty charts that you see here. We know that there is a there was a breach. This is nearly 7% of down, and a reversal was made. Now it is moving up the second yellow channel that you're seeing, and almost climbed into the territory of the bulls, of the bears basically, right? So it's a resistance zone that blocked down earlier, and it has climbed into that. Interestingly, it was all 4 days of gap up, so definitely a festive mood is seen very much in the market, and the candlestick is a wide range bullish with a gap up, pro gap, multiple pro gaps, clear bullishness, and at resistance below the 50 DMA, but it conquered the 20 exponential moving average also. Nifty we are talking about, so definitely bullish. Levels to look at on the upside. Resistance can be seen at near to 450, 500, and 600. 600 will be the zone where the trend line is drawn from from the top swing all-time high to the current, joining that trend line. It will be near to 96. So that's where the resistance is hit. So 19,500 and 96 is going to be a huge resistance. Once it's cleared, then it will be the next gap that's seen at 18,850 kind of zones, and then towards the all-time highs. Downside, there will be good support of the gap that's there at 19,200, 19,175, that zones. If that is breached, it goes back to the 200 EMA, which is 18,800 zones, and in between you have the rounding number 19,000 as the support. That's what it is. It is a solid bull attack that happened here. But look at the banks. The banks also had consecutive 4 gap ups, which is definitely bullish, but look at the body size. This is all indecisive. Right? It looks like a doji. Doji is indecisive. All small body candles are indecisive. It's a bull bear fight that's happening. Right? But interestingly, if you draw the trend line from connecting the dots, connecting the previous swing highs, you can see that it is broken out of the trend line. So that's positive. It has climbed above 220 exponential moving average, which is once again positive. But still, the first resistance could come in at 44,000 rounding number, and it's also a confluence of 150 exponential moving average. Right, so it has cleared 200 and it has cleared 100 also by today's move. Banknifty, it's positive, but there is some indecisive elements, not yet sure. Right, so once again, it has to climb above the 43,900 zones above. It has to climb till the 44,000 to be sure that it's into the bull into the bear territory once again. So, but definitely good move, decent move of 0.7%, consecutive up moves and gap ups. And so every day what's happening is a gap up and consolidate, gap up and consolidate. But today it was gap up and then break out at 3 p.m. That's what happened in the Nifty especially. Right, that's how it is. So for institutions of Fyers was selling today also, small quantity, but selling continues. That's where the worry is. Otherwise, it is a 1% up with Nifty and a 3 p.m. breakout after a gap up and consolidate in the morning half. So it's rest is all we have already seen. So US indices, there's a cool off that has happened. US markets are showing some green, 5% last week, green, big solid move. Dollar, crude, and all that was cooled off a little bit, so that way it's fine. But the war and uncertainty and inflation and recession fears are still there. It has not gone off. The VIX has spiked up today. That is something interesting. When it is supposed to have cooled off, today it spiked up. In the market, it spiked up 1%. VIX also spiked up, which is contrary, which is a contradiction. So it's at 11, but still in the low volatility. But this contradiction could mean that there is going to be a resistance tomorrow there. Right? Remember, we have 2-3 days more before the expiry on Thursday. So VIX, otherwise still weak charts. Momentum has climbed up, it's in sideways, not at bull zones, and rising up. So, but the charts otherwise, it's at a resistance zone. Anything could happen. There is some distance in Banknifty. Right, it has just got into the bear zones, and then tomorrow there may be bear attack. So still, cannot say it's bulls horns yet, right? Now, across sectors moved up, especially the realty is doing extremely well. Metals, pharma, IT all did very close to 1% of more. So across sector, up move has come. All of them have climbed back in the bull zone, into the sideways zones, not bull zones. Bull zone only reality is there at, yeah. So again, if this move is failing and the price action of lower high is still not breached, if that's breached, and if it is not happening and it's coming down, then also we have an investment opportunity for buying quality stocks, because 8,800 seems to be very good. Even if it is consolidating at this range, it seems to be a good zone. So you need to be buying opportunities. Well, traders, you have to be cautious. Although we had a very good move, 3-4 days of good solid move has happened, we have to be slightly cautious because we are still not yet there, right? There are some price action elements also that has to be cleared ahead, and all those gap downs and heavy bearish vertical falls that happened before the Fed decision, all that gap downs would be acting as resistance on the upside. So you gotta be cautious, right, and play it safe. VIX is spiked up when the market has moved up, so that's need for extra caution. So play it safe and cut short your position size if VIX is further spiking towards 20. Otherwise, play it safe. That's all that begin to manage your risk, right? If you're not subscribe and share it to friends and colleagues so that it reaches out to maximum people, right? Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.